FIGR Technology Solutions is showing signs of becoming a standout in the blockchain marketplace space. Bernstein analysts highlighted this after the fintech's first quarter earnings report revealed strong performance across revenue and EBITDA. The company is building a blockchain-native capital market ecosystem, turning real-world credit assets into blockchain-native instruments that can be traded, funded, and financed more efficiently. This is a departure from traditional lending platforms and signals a shift toward a new kind of financial infrastructure. What makes FIGR different is its approach to real-world assets on blockchain. The company is not just a home equity lender using crypto branding, but is positioning itself as a full-stack blockchain capital markets platform. This model allows for the creation, funding, and financing of assets that are native to the blockchain. The analysts believe this structure could lead to more efficient capital flows and greater transparency in financial transactions. One of the key insights from Bernstein is that FIGR stock may increasingly reflect blockchain loan volumes in real time. This is based on the company's live blockchain data, which the analysts say suggests a strong Q2 is on the horizon. As more investors and market participants get comfortable with tracking live blockchain volume data, they expect FIGR's stock price to act as a live indicator of these blockchain loan volumes. This is significant because it could change how traditional investors view blockchain-based financial instruments. If a stock can act as a proxy for blockchain loan volumes, it could bridge the gap between traditional finance and decentralized finance. However, the challenge remains in how to handle collateral in DeFi environments. Mike Cagney, FIGR's co-founder, explained that when real-world assets are moved onto blockchain, a key question is how lenders can take fractional positions in whole. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Loans, especially when liquidity is limited or loan-to-value ratios are breached. This challenge is not unique to FIGR, but is a common hurdle for all real-world assets on blockchain. The question of where a fractional position can be sold, even if it could be taken, remains a key issue for the broader RWA space. Solving this could unlock new levels of liquidity and efficiency in blockchain-based lending and financing. The implications of FIGR's model are far-reaching. If successful, it could set a precedent for how real-world assets are integrated into blockchain ecosystems. This would not only benefit FIGR, but also the broader blockchain marketplace sector. The company's ecosystem is designed to be a full-stack solution, combining the strengths of traditional finance with the transparency and efficiency of blockchain. However, the road ahead is not without uncertainty. The DeFi space is still evolving, and regulatory scrutiny could impact how these blockchain-native financial instruments are treated. Additionally, market adoption is a key factor in determining whether this model will scale beyond FIGR's own ecosystem. The next signal to watch is whether FIGR's Q2 performance will live up to the expectations set by its Q1 results. If the company continues to show strong blockchain loan volumes and efficient capital flows, it could signal a broader shift in how blockchain marketplaces are structured and valued. Investors and analysts will be closely monitoring FIGR stock as a potential real-time indicator of these trends. In the meantime, the broader blockchain marketplace space is watching to see if FIGR's model can be replicated or adapted by others. If it proves scalable, it could lead to a new wave of blockchain-native financial platforms that redefine how credit and capital are managed in the digital age. The mechanism at play. Here is the transformation of traditional assets into blockchain-native instruments, which can then be traded and financed in a more transparent and efficient manner. This is not just a technical shift, it's a fundamental rethinking of how financial systems can operate in a decentralized environment. The stakes are high, as FIGR is attempting to build a bridge between traditional finance and DeFi, two worlds that have historically operated in parallel. If successful, this could redefine the role of blockchain in capital markets and open up new avenues for liquidity and investment. The next signal to watch is the company's Q2 performance. If the live blockchain data continues to show strong loan volumes and efficient capital flows, it could reinforce the idea that FIGR stock is a real-time reflection of blockchain activity. This would not only validate FIGR's business model, but also provide a new lens through which most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Investors can view blockchain-based financial instruments. However, the challenges remain significant. the issue of collateral in DeFi is a technical and regulatory hurdle that could limit the scalability of blockchain-native capital markets. Until solutions emerge for fractional positions and secondary market liquidity, the full potential of this model may remain untapped. In the meantime, FIGR's progress will be closely watched as a test case for the broader blockchain marketplace space. If the company can overcome these challenges and continue to deliver strong results, it could serve as a blueprint for others in the industry. The uncertainty lies in whether this model can be replicated and whether the market is ready to embrace blockchain-native capital markets at scale. But for now, FIGR's Q1 results and the insights from Bernstein suggest that the company is on a path to becoming a unique player in the blockchain marketplace ecosystem.